Coming up on Market to Market, no amnesty for undocumented farm labor. Tariff revenue taken in and new levies sent out. A dramatic difference in crop years from the east to the west. And commodity market analysis with Kristi Van Ahn, Kjeseth, next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because a pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, July 11 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. Several states have placed limits on foreign ownership of U.S. land. Nebraska Governor Jim Pillen said at a Washington, D.C. event this week he wants ChemChina's Syngenta out of his state, highlighting his refusal for even a meeting with the company. Pillen was joined by other governors, senators, and 4 Trump administration cabinet members at a press event Tuesday on national security. The federal government was highlighting the issue while also discussing workers from other countries in the U.S. Peter Tubbs has the story.
This week, Secretary of Agriculture Brooke Rollins promised to find a balance between deporting undocumented farm workers while not disrupting the agricultural supply chains they support.
Ultimately, the answer on this is automation, also some reform within the current governing structure. And then also, when you think about, there are 34 million able-bodied adults in our Medicaid program. There are plenty of workers in America, but we just have to make sure we're not compromising today. So no amnesty under any circumstances. Mass deportations continue, but in a strategic and intentional way as we move our workforce toward more automation and toward a 100% American workforce.
Secretary Rollins' comments echo statements made by President Trump in a stop in Iowa last week.
Everybody agrees that we're finding the criminals, the murderers, the drug dealers, we're getting them the hell out of here. But the farmers, some of the farmers, many of you sitting right here, I have 4 friends right in the 5th row, but some of the farmers, they've had people working for them for years, and we're going to do something.
The LA Times is reporting that the Nisei Farmers League, a farm labor advocacy group, is skeptical of the idea of having Medicaid recipients harvest crops. A spokesperson made reference to failed attempts to bring unskilled labor into the mix during the 1990s under the Welfare to Work program. The USDA also announced the launch of the National Farm Security Action Plan to improve the security of the country's food system. One point of emphasis in the plan is to address concerns about foreign ownership of farmland in the United States. The USDA counts 876 million acres of agricultural land in the 50 U.S. states. USDA data shows over 45 million acres of American farmland as being owned by foreign investors. Investors in the European Union own over 20 million acres, while Canadians own 15 million acres. China is known to own only 277,000 acres of farm ground across 30 states, or roughly 0.3% of American agricultural ground. Currently, 26 U.S. states have laws that either restrict or ban foreign ownership of farmland. For Market to Market, I'm Peter Tubbs.
The refusal to lower the key interest rate by the Federal Reserve Board is keeping up the intensity of the drumbeat for the removal of Jerome Powell as chair. As borrowers look for a break, the White House kept pressure on trading partners for better deals, which would improve the federal deficit and national debt. David Miller reports.
The tariffs, as you know, are starting to come in at record levels. Tremendous amounts of money are coming in.
This week, President Donald Trump moved his deadline for imposing tariffs on countries who have yet to make a deal with the U.S. from last Wednesday to August 1st. Those who fail to make a deal are being threatened with an additional 10% increase in duties.
We will have taken in about $100 billion in tariff income thus far this year, and that's with the tariff, the major tariff not having started till the second quarter. So we could expect that could be well over $300 billion by the end of the year.
The exact breakdown of which importer is paying the tariffs wasn't immediately made known. Tariffs are used as a way to correct a trade imbalance, and, usually, the fees are passed on to the consumer. The nonpartisan Congressional Budget Office estimates tariffs will bring in $2.8 trillion over the next decade. Bessent says the estimate is low. Trump sent out letters to 22 nations this week, including major trading partners South Korea and Japan, threatening tariff increases ranging from 25% to 40% if no deal was reached by the deadline. Trump singled out Brazil with a 50% duty because he believes the trial of former President Jair Bolsonaro, who is charged with trying to overturn his 2022 election loss, is a witch hunt. Current President Lula da Silva says that if the tariff is imposed, the South American economic powerhouse will retaliate by suspending trade, investment, and intellectual property agreements. At the end of the week, President Trump said he would add a 35% tariff to goods imported from Canada, the nation's #1 trading partner. For Market to Market, I'm David Miller.
More than 100 people were killed in flash floods in Texas last week. Drought conditions were in place where the massive rainfall occurred in the Lone Star State. Now, other parts of the country are dry, while others are the opposite in an almost historic way. Again this year, the MTOM podcast series is having conversations with farmers in 2 different states and at various times in the growing season. This week, we check in with our producers in Idaho and Ohio for this week's cover story.
Soybean farm. Man, what a year. I don't even know how to describe it other than you just kind of scratch your head and, you drive around, you talk to your neighbors, and you're all in the same boat, so it makes you feel a little bit better after you drive around and look at what you got out your back door on your own personal acres. But the way I described it to my wife over the weekend as we were cutting wheat there over 4th of July during the nice stretch of weather we had was, I just feel like it's just this year that you're just never going to get ahead. We're just going to continue to be behind, and then before we know it, it'll be harvest, and before we know it, it'll be Christmas. So, yeah.
Well, when we last talked in the spring, you were feeling behind already then because rain had hit. And rain, it wasn't so much that it was so heavy, but it was ill-timed. Am I remembering correctly?
Yes. And at that current time, the weather was just unseasonably cold. We always get some cold stretches through April and May, but May was one of the coolest on records. It wasn't necessarily overly wet. Like, it was plenty wet, but it was just cool. We had some later frost that actually affected our wheat a little bit as we got into harvest, like I said, over the weekend. But my grandpa and great-grandpa used to joke about, you have thunder in February, you'll have frost in May. So, and we had some thunderstorms here in the winter months. So apparently that still holds true to some later frost days. So.
We opened discussing that that's not necessarily grass that you want behind you. It's supposed to be beans. But let's update what the bean crop then looks like.
Yeah, I tell you what, Paul, I am pleasantly surprised how good the beans look and disappointed how poor the corn looks for how it's handled all the moisture it's had. And similar farms, drained similar stool types, plant dates were about the same. But the beans have managed a lot better through the warm, wet temperatures than the corn has. Corn is just very uneven. The stand is there and all that's fine, but just a lot of wavy up and down, several different growth stages, ponded areas that have drowned out or, got water away and just corn's behind. So, but beans look very good overall.
Things were looking up in the spring with moisture, but you had that feeling, didn't you, that it wasn't going to last?
I knew we were in a difficult place because we did not have a ton of extra moisture banked in the soil profile, which meant that we really needed that typical or typical to above average type rainfall. We've had the absolute opposite story. So in April, May, and June, which are May and June being the most critical for me, but April, May, and June this year, we had 1.5 inches of rain in those 3 months. And for me, I need an average rainfall is 5.5 inches. So I know for some people listening or watching, 5.5 inches during April, May, and June is not huge, but that in my world would make a crop. So it's been really frustrating. Like we've talked about before, like we talked about last time, it's the nature of farming. The weather is what it is, and you work with it. But it's been rough to watch because all the crops did look pretty good. In May, there was so much potential there. So it's been hard to watch, but.
If it rains 2 inches over the next 3 days, what does that mean for you?
If it rains 2 inches over the next 3 days, it means that I might have some moisture to plant into for next year's winter crops. And we'll start seeding those late August if there's moisture there.
Winter wheat, what did make it has been harvested or is about to be harvested?
So in our world, where we're at right now, we're about 7 to 10 days out from harvesting. So I think it'll be about July 20th when we're really kind of moving in earnest. Right now, the combine's ready to go. The grain bins are all cleaned out. The air tubes are set up. We're just kind of in that waiting pattern.
Is there anything yet to be harvested this summer?
Yeah, so we've got canola. We have winter and spring canola. That will be the first crop that we'll start with cutting. And then we have the winter wheat and the spring wheat. We have chickpeas, and then we also have the camelina little test plot. It seems to be coming along fine. It's very clean. We kept it nice and clean. I was worried about weed trouble, but it looks good. As far as we know, we won't know till we put a combine through it, obviously, exactly what we have. But it's been a fun experiment, if you will, so far. So what we'll do harvest-wise is we just start wherever it's most ripe, and it's going to take us 5 weeks. We have one machine, a small crew of our family, and we'll just slowly work through what is most ripe and most critical to get through that's in front of us. It will take, another 2 to 3 weeks to have everything ripen anyway. So there's that little bit of natural, things aren't all ripe at the same time because of our elevation. And then you factor in if it's a spring crop or winter crop, etc.
The full MTOM episode will release Tuesday.
Next, the market-to-market report.
Friday's WASDE report left balance sheets and yield estimates relatively the same. This did little to move the market in a week where good growing conditions fed the bears. For the week, the nearby wheat contract lost 2 cents, and the September corn contract sold off 24 cents. Absence of export sales by China continued to pressure the soy complex. The September soybean contract fell 46 cents, while August meal sold off $7.10 per ton. December cotton shrank by $1.04 per hundredweight. Over in the dairy parlor, August Class 3 milk futures declined 70 cents. The livestock market was mixed. August cattle added $8.15. August feeders put on $15.83. And the August lean hog contract cut $1.42. In the currency markets, the U.S. dollar index increased 29 ticks. August crude oil gained $4.41 per barrel. COMEX gold strengthened $37.71 per ounce. And the Goldman Sachs commodity index was up by more than 4 points to settle at $557.30. Joining us now, regular market analyst Kristi Van Ahn, Kjeseth. Hello, Kristi.
Hello.
Is this wheat market more than just harvest pressure right now?
I just think that these markets in general are really struggling to get any sort of positive information. I think you look around and anytime you're in this time frame, and I know the rain, when you look at it for wheat, is not that important right now and actually might be causing more problems. But I just think anytime you're having rain during this stretch. It just brings out some sellers in the market. And I just think that you look at kind of the carryout levels for wheat. You know, we're at the exact same carryout or close to that we were a year ago, and our prices for Kansas City wheat are pretty much the exact we were a year ago. And so I think that there's just no reason to really budge them right now. I think that wheat, and we've been saying this for a year and a half now. I do think that there's enough on the backdrop that if something could come together, I think wheat really does have a story, because you look at the world situation on ending stocks for wheat, and there is that story there. There's issues in Australia. So I do think you could come together on that, but you got to see something happen first.
Well, what we've seen happen in the corn market is a lot of rain. And in key growing areas, the markets, the estimates, there was some private groups that really put a lot of conversation at the coffee shop.
Yes.
This crop could be really big. Is that the biggest story in corn this week?
Yeah, I think it's just in general, you have yet to get a weather threat story, and that's not very typical. You usually have some sort of story at some point, a little bit of hot stretch and a dry stretch paired up somewhere that gets people just second guessing, you know, scares off some shorts. We have not had that. Every Sunday we've been coming in here with a forecast that has plenty of moisture in these areas that you're just saying, where is the issue? And now you have these independent yield estimate models coming out with some very, very big numbers. And I'm not in that camp. I feel like it's too early to be talking about that. But here's the thing. What I think isn't necessarily what matters, right? You have to remember that you might feel like those are inappropriate. That does not matter. You take those and the market is digesting them and the market is pricing those in right now. So you need to do the same thing whether you agree with them or not. And that is what the market's doing.
So what do you do in that situation?
What do you do? You know, to be honest, I do think that corn feels like doom and gloom. The world is over. What are we going to do here? It's been a slow bleed. It is really close to some support lines that we've been watching. And so right now I'm not that type of person that says just ignore it. But at this point, I am saying do not be that person that panics here. Our support lines are 413 for December corn. We are right there. Below that, it's 405 and 385. And I think you need to reach a point where you're saying, where is the risk? You know, where is the bigger risk in the market? And when you're talking, we're 413 and the targets are 405 and 385, I just feel like you're getting to a point where that's enough risk that you can kind of say, hey, I know this, I can handle this. I need to just breathe through it, let it happen if it happens, and then focus on my game plan moving forward.
Rain's also making a lot of soybeans too. And that is, again, I would imagine, it's more maybe a psychological $10 mark that's impacting us there.
Yeah, I think so too. With 413, 1007 has been our target on November beans. Then you have your psychological level of 10, and then below that, it's 972 is what we're looking at for some numbers here. I think beans are such a wild card. You know, you saw what beans could do when there was a hint that China was stepping into our market. You know, you had this hint that we had this trade deal. You had some unknown destination sales. They were small, but they were unknown destination, and that got the market so riled up so quick. You got to those targets. Beans, if you could get a trade deal done with China, that I should say you get details of a trade deal done that has actual details that includes agriculture. I just think beans are a blow up waiting to happen, but you got to see that first.
Devil's in the details, right?
Right.
Is the saying. Let's go back to the comment you just made about pricing. Does a low price right now, corn or beans, make us think that, well, hey, now's a chance is a buying opportunity for some other country?
I think so. You look at where the U.S. dollar is, you look at our prices. I would have thought that Mexico would be in here for a little bit more. You've seen them in here. You saw a big one a few weeks ago for a decent sized sale. You would just think that you'd see more activity. Our demand has been running hot, but I'm talking about that big private sale that is what you need to spark the market and get people kind of buying into the situation. You would think that that would start to happen, but demand has been very hot. You know, you're not getting those flashy sales, but every week it's adding up. And you look at where we are for old crop, we're over 100%, and that'll even itself out. You'll maybe have some rolls, some cancellations and everything, but that's a strong start knowing that we're where we are and that you could potentially even see USDA justify another increase to exports for old crop corn down the road.
We'll get back. Basis, I'm going to ask you about Basis and Plus. I have a question that I kind of ran through here. It's really, answer it in the corn mine if you could, and if you want to throw in beans too. Jason in Iowa wants to know, the market is so flat, 12 to 18 months out, barely any carry. What strategies are out there? Calls and puts are just, they don't seem attractive either.
Yeah, I wouldn't spend really money on puts right now unless you're really, really bearish, right? If you're saying, hey, I can't sleep at night, that's where options to me are very cheap right now, and you can do it as a strategy to say, hey, out of sight, out of mind, let it do it. Otherwise, I wouldn't be spending money on them. I am close to being in the camp of spending money on call options. And when you look at the carry, yes, carry from, crop year to crop year isn't necessarily there, but the carry from December to July corn or the carry from Nov to March beans are some of the widest levels we've seen, especially during this time frame. And so I would say if you have sales at the elevator that you don't need to deliver, you really need to be looking at this carry right now and be taking advantage of it. Now, if you have, contracts at the elevator and you think you need to deliver them, don't be rolling them out because, yes, the carry is great, but interest rates the way they are, take it in hand, take that cash in hand.
Let's go back to Mexico and its relationship to live cattle. And I know it's also impacting the feeder market, but live cattle this week, volatile. Cash has kind of changed a little bit, but it's about those cutout values. The consumer is still buying, right?
Yes, and the demand is still there, but I do feel like you're starting to get a little bit on the toppy side. It makes me, yesterday's action, Thursday's action made me really nervous, right? You knew coming into the day that they had shut down the border again. You had live cattle, feeder cattle take off, and then they kind of reversed themselves, made new contract highs across the board, reversed themselves, and I was like, that is not what you want to see on a bullish set of information. Now we're coming in on another day of another set of bullish information. The fact that you could see these tariffs coming in on Brazil. We get a lot of beef brought into the U.S. from Brazil. So I think both of those impacts are bullish situations that the market is starting to feel a little tired on. And when you start to feel a little bit tired, you wonder, hey, can cutout values, can cash do it alone? Because we know managed money is long. They're record length here when you look at hogs. And so sometimes cash can't do it alone. Just like fundamentals right now are semi-friendly for the corn market. I'd call them friendly for the corn market, but that doesn't matter at all right now. And that's what I'm afraid you'll get to for cattle is that even though cutouts are strong, even though cash is strong, will you get to a point where it doesn't matter because managed money wants out?
And that's been part of this discussion, right? I think we have a question that we'll talk about in Plus is at what point, what's the sign that managed money is getting out? Is that a commitment of traders type thing that we need to be watching?
Yeah, so every Friday you're going to get that unless a Friday's a holiday trade. And so you get that information. And so, yeah, you do have to watch it. You do have to see what those trends are. I get very nervous that, you're just going to run out of steam saying, hey, we got all this bullish information. Well, we all know these things. We all know inventory numbers are low. How long can we ride that story that you continue to see that trend happen? And so eventually you need to feed the bull, and we've done a good job doing that, but you're looking at the dynamic and you're saying, what else could we find out there that's going to be bullish for cattle? And I feel like we've covered so much.
Well, for feeders, it could be cheap feed.
Yes, and that's exactly it. I mean, you look at where you're at, you look at meal prices. I don't know, I mean, obviously you have your hog producers really paying attention to the meal prices, but I mean, those levels are so low that you have to go back years to find these meal prices that we're at. And you know what, I think corn's cheap right now. You're not necessarily going to hear that from everyone, right? Some cattle guys might not necessarily agree with me, but you look at where corn prices are compared to 3 months ago, 4 months ago, you're $1 off those values for old crop. And so I think you're looking at those situations, seeing the profitability there for a lot of those cattle producers. You're just asking them to put a lot of risk on the table to continue that trend. And it's working out for them right now. The profitability is there right now, but that's a lot of risk you're asking that cattle producer to take on.
And the hog producer has been watching some of their market share erode because, again, going back to beef.
Yeah, and that's just it. I always have this conversation because I actually really, truly love a pork chop. I love it. And so I just am really surprised you have not seen that demand shift over, or at least just kind of taken a little bit away from beef. And it's just not there. We are very much big supporters of beef when it comes to the demand side of things. And I just don't think you've seen the prices where they are. I don't think you're going to sway people at this point.
Not sway them to protein completely?
Right, just not sway them to a different product,
Okay.
right? You know, I just think they like what they like, and they continue to be willing to spend a little bit more on it.
Quickly as we close, oil has kind of rallied again here. It's in that upper 60 mark. That kind of seems to be the spot. Is that what you think?
Yeah, I think there's so many world dynamics that can influence it, but when everything shakes out and you have these world dynamics, you also have the President of the United States very adamant that he wants crude oil prices low. And so when you have that chirping in the back of everyone's ear, I think people are a little bit worried to be able to be a buyer to push it much higher without a big world event, knowing that that's the policy that you want.
And we'll see what we want to hear from you in Market Plus. Thanks, Kristi.
Thank you.
Good to see you. And you have been watching the analysis segment. And in a moment, we will continue our discussion in our online-only segment. Search Market Plus with Kristi Van Ahn, Kjeseth, wherever that you get your podcast to hear that conversation, or go to our website at markettomarket.org. Our YouTube site is full of current and past clips from our program. Be the first to know about new releases of content when you subscribe to our feed of youtube.com/market-to-market. Next week, we look at permanently protecting land for agriculture's use. Thank you so much for watching. Have a great week.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.